Good evening, ladies and gentlemen. Even though I cannot see you, I hope that there are enough ladies and many gentlemen in our audience. And thank you for joining us this evening. I must admit that 2021 is really started on a great beat. It's very promising. I can feel that it is exciting, sometimes even breathtaking. And of course, I'm talking about blockchain technology as a disruptive technology in capital markets, but also as a technology that's enabling a new asset class. So we're here today because last year during the pandemic, and actually around the time of the Bitcoin halving with the Wealth Mosaic, we decided to launch a new report that looks at how blockchain and distributed ledger technology will reshape the future of asset and wealth management. It was part of the WealthTech Views series. And the reason was, and I do say that, you know, the rally in the cryptocurrency market that's gotten everybody excited started much later in August. And today we find ourselves in a market with approximately $1 trillion market cap that no asset manager or wealth manager can ignore anymore. But we felt at that time early on that we had to get asset managers and wealth managers up to speed so they can in turn help their clients with the investment opportunities in the space, but not only. They would need to get up to speed with the fact that this technology is going to change their business behind the scenes, their daily operations. So this is the aim of this report. Let me share with you the companies that are profiled. First of all, we invited two thought leaders to share an opinion piece. One of them is ARK Invest, that most of you know. This is the Fintech, I would call, manager that was the first one back in 2015 to include Bitcoin in its holdings. Also, we have an opinion piece by the MAMA Association, that is the Multi-Chain Asset Managers Association. It's a trade association focused on the development of on-chain management. We've also profiled 10 solution providers and thought leaders that are involved in different ways in the space. And we asked them to share their views about the current state of the market and what they foresee in the future, always in terms of the impact of distributed ledger technology and blockchain on changing, transforming asset and wealth management. Of course, sharing the solutions that they offer too. Let me just briefly introduce the companies that are profiled and also share some highlights of what their views were in terms of where we are, what are the challenges and the opportunities in the space. So there's a group of companies that are profiled that I like to think of them as those that are building the infrastructure needed for the new capital markets, the new way that global markets will be functioning. Decent is a Swiss tech provider that specializes in KYC AML software and also on a token issuance technology platform. Funds DLT is building infrastructure for fund administration. Securrency offers RegTech solutions and interoperability solutions for compliant integration for the global adoption of digital assets. ConsenSys, which I left last because Lex Sokolin, the CMO from ConsenSys and the Fintech leader, is with us tonight, and we'll be hearing more. ConsenSys, as we all know, is a company building a suite of software on Ethereum, from Metamask to Dr.Efi, and as I said, we will be hearing more this evening. In the group of companies focused on investments and banking, we profiled Like, which is a crypto exchange and also a market maker, building an ecosystem and awaiting its organized trading facility license from FINMA. Area 2 Invest is a marketplace that is multi-asset and compliant and enables the issuance of both traditional assets and alternative digital assets. Ficas is an investment manager and is the first listed ETP of an actively managed crypto product. It is Swiss-based and just recently got the regulatory approval to be passported to the EU. Crescofin is a company, sort of alternative banking company, offering high-yield deposits on the main fiat currencies, the US dollar, euros, and the Swiss franc. It's using the blockchain, and the high yields are based on asset-backed invoices insured by Lloyds. Last and not least, again, it's SEBA Bank. We have Stefan Schwitter with us tonight, so we will hear more. SEBA is one of the 2 crypto banks licensed by FINMA, and bridging really the old and the new economy. This group is joined by 3 more from the US this year, as we have positive regulatory advancements in that space. And the last company I want to mention that's profiled in our report is Chainalysis, which is one of the top blockchain analysis companies. They offer compliance and investigation software, and they've been working with governments and crypto businesses, and they just recently crossed the unicorn line with $1 billion valuation. Let me come back and put our slide aside. What I want to share with you before going to some housekeeping rules is, as I said, some of the views that were shared by all these thought leaders that I mentioned in the report. I'd like to highlight them. There's an agreement, there's a consensus that blockchain and distributed ledger technology as an infrastructure is going to enable us to create capital markets that are more resilient in terms of capital, of counterparty risk, settlement risk, and of course, in terms of gaining efficiencies and reducing costs. So this has very shyly started in the market. The example of using this infrastructure for administering funds or creating marketplaces to trade financial contracts is really at the early stage, but that's the direction that we are heading to. Eventually, and this is a larger vision, These technologies are going to enable us to have a real data-driven investment world in real time. What is clear, and everybody can understand that, is that the technology is allowing us to create innovative investment products, and they are truly alternative. We're also seeing software for compliant tokenization. SEBA, I'm sure, can talk a lot more about this. And as soon as we get the first regulated security token exchange, this will really unlock a lot of value, and that hopefully is close to happening. And then on the side of challenges, the main challenges are on the regulatory front and on the cross-jurisdictional front. And as we all know, these are very typical in any early stage disruptive technology. And also, what is also typical is the challenges around interoperability. So those are not uncommon, and they exist in this sector too. So before we start our interesting discussion and I introduce briefly our panelists, I just want to share some housekeeping rules with you. There is a chat that you can at any time ask questions. And at the end, of course, we will allocate some time to answer those questions. We will be launching a poll, and you can see it again and engage with it, participate at any point during the webinar that you feel is appropriate. And I think on that note, I will start introducing my esteemed panelists. We are in Europe, I think all of us located. I am in Switzerland, so I will start by introducing Stefan Schwitter from SEBA Bank. He is the head of investment solutions. Welcome, Stefan.
Thank you, Efi.
And then I will go close to Germany to introduce Dominik Poiger, who is the product head of VanEck. Welcome, Dominik.
Thank you.
And last but not least, Lex Sokolin, who's joining us from London, if I'm not mistaken. He is the CMO and global lead of Fintech at ConsenSys. Where are you, Lex, exactly?
I am still in London by Old Street, the tech hub that lots of people think about while sitting at home on Zoom.
Great. Great. So let's dive into interesting topics. As I said, these are exciting and interesting times with lots of developments, lots of activity in this space. So based on what you're seeing, both at the retail level and the institutional level, how are asset and wealth managers taking notice of all these all this progress, all the events that are happening? I think, Stefan, if you can give us your point of view, your insights.
Yeah, absolutely. So what we're seeing is a lot of institutional demand. I think what's been driving the demand is 90% plus institutional. So asset managers, family offices, ultra high net worth individual, and the demand from that kind of clients is actually why I moved from the traditional side to the digital asset space, because the traditional side wasn't able to satisfy those demands. So family offices would come to me and say, so, I'd like to build exposure to digital assets. Can you help me? And on the traditional side, I couldn't, and I wasn't allowed to, and I didn't have the infrastructure, right? So I moved over to the digital side, and what we're seeing now is mostly family offices and family office type investors have been looking at the market for 3-4 years and are now ready to take the plunge, typically looking to build 3 to 5% exposure. So that's a dramatic shift to, going back to the last bull market in 2017, which was entirely retail driven. So a completely different landscape.
But it's remarkable what you said, Stefan, that they were on the sidelines watching for a couple of years. So it's not like, newcomers. Dominik, what are you seeing from your end? How is it different or similar to what Stefan?
Yeah, I think it adds perfectly to what Stefan said. I think people have been sidelined for a few years because there weren't appropriate products that, for instance, family offices or high net worth individuals, but also private wealth managers were able to allocate into, or the infrastructure to buy physical coins weren't given. And I mean, from our perspective, we see it when you look at the Swiss exchanges, 6 Swiss exchange and Deutsche Börse, etc., that there are now a bunch of products that give anyone, basically, whether that's retail or institutional, the ability to get exposure to mostly Bitcoin. And surely there's also some products in the work that will give or enable investors to get access to other sorts of crypto or digital assets. Maybe as a general remark, I think 2020 was the year that Bitcoin really established itself as a digital store of value, and investors are finally understanding that. So that value proposition is out there, and plus the ability to allocate is there as well.
Interesting that the dominating narrative around Bitcoin. I don't want to get into the fact that Bitcoin has many narratives. It so happens that this one is the dominant one. Lex, along those lines, how should asset managers really start and help their clients to get into this space? And then obviously I want to hear from you guys too, how you see this.
What a wonderful question. I think we have to pull apart what we mean by asset managers, wealth managers, family offices, financial advisors, because we see very different adoption curves for them. So asset managers are the closest to capital markets, and they are the most likely to be interested to make products, to sell products. Wealth managers, fiduciary wealth managers in particular, are still quite squeamish about taking on new products, whether it's crypto assets or whether it is, private equity or SPACs or what have you. And so I think that part of the value chain is still quite different. We see a lot more experimentation and demand with really institutional asset managers, institutional capital markets, and the overlap there. And so it's launching products, right? It's launching fund wrappers, it's launching trust products that then a more sort of risk-seeking family office or other entity that is regulated in such a way where they have to hold a regulated fund product, they can say, yes, I'll take the futures instrument, or yes, I'll take the ETF or the trust instrument. However, there's also within the asset management space much more crypto native entities, and they are legitimately much more crypto native and manage somewhere between 25 and 50 billion in assets at least, with kind of an institutional mandate. And we see those types of companies really choosing into purchasing on-chain assets, really taking a lot more risk to differentiate from the pure, asset class exposure to one or two coins, and really trying to think about performance more globally.
Interesting. Stefan and Stefan? Dominik?
Yeah, it's so I want to pick up on some of what Lex said in terms of there's not just there's interest, right? And it's more institutional than it was 2 years ago. And what I hear from institutional investors is really they've been looking at the space, waiting for maturity, infrastructure to be in place, and primarily the regulatory framework to be in place. And in the US and Europe, that's increasingly the case. I think Asia is lagging in some places. So, they're taking the plunge, let's call it 3 to 5% allocation. But to Lex's point, the approaches and the needs are manifold. You have the family office who just wants to build an allocation to Bitcoin and needs a regulated, product that can be listed at the exchange. That's at one end of the spectrum. And at the other end of the spectrum, we see very sophisticated investors coming in, wanting us to help them with coin analysis. It's like, okay, well, I already have the top 5 coins. I want to look at the coins 30 to 50 and look at the protocols. So it's really extremely refreshing, the breadth of investment needs that are popping up.
Very interesting. So even interest in the small caps, so to speak, and in also understanding the differentiation between the different investment opportunities. Are you seeing this year a differentiation, meaning there's payment sort of cryptocurrencies and there's other infrastructure, or if you want, smart contract cryptocurrencies, and then there's the whole DeFi space? Do you see that interest, or is it really 98% dominance of the top 5, so to speak?
Yeah,
Was that about
Say, yeah. Go ahead, Dominik.
I think what we see from our perspective, I want to emphasize again that people have understood first the value proposition of Bitcoin, at least on the traditional market side. And I mean, the DeFi world is so complicated to outsiders. So I think it'll take a little bit more time for the mainstream investor to really access this market and really understand what potential lies there. I don't know, maybe anyone has another view on that. At least that's what we see from an asset manager side.
I mean, let me ask you this question in another way. What is really the reward for engaging in this space? Is it really to the capital appreciation of either mineable or non-mineable tokens? Is it about staking, for example, or the DeFi space? Because there's different opportunities here. What do you think the reason to engage is? What is the reward? How are people thinking about it, or how should they be thinking, the asset managers?
Yeah, I think there's a couple of frameworks that can help folks structure their initial entry into the space. In terms of your five top assets, I think the Bitcoin story of retaining digital value, super valuable. And I think the second story of a global financial infrastructure software layer, so the Apple app platform or the Alibaba Alipay platform, except open source, decentralized, and with embedded value transfer, so Ethereum and other computational chains. Those two stories are strong. The rest of the stuff is just there as sort of decoration for an analytics page, I think. But those two things are kind of really important and fundamental. And you can choose to invest in a commodity that could be widely adopted and that has money supply implications and so on, or you can choose to invest in a digital economy, or so invest in cloud or invest in the applications on Apple or Windows, except in a modern generation. I think that's kind of one choice, one framework. The second framework, once you kind of get past that and think about Ethereum in particular and decentralized finance or the other smart contract platforms, is to choose what's interesting to you. And there's no wrong answer. So you can say, I'm interested in the asset class. I love capital gains and Twitter and unsolicited investment advice. That's what I like. That's a joke. That's a disclaimer for the SEC. So if you like the asset class, you can really focus on the returns characteristics of the various tokens from which to select. And they have really interesting return characteristics, including cash flow, including yield, including various accrual, including option and derivative characteristics that are identical to the financial instruments that we see in institutional capital markets. And so you can parse that as a portfolio manager. Separate and apart from that, you can say, what I'm really interested is the financial infrastructure which makes these things. I'm interested in the factory, the machine that manufactures these instruments. In our traditional world, that would be Temenos or Fiserv or Envestnet, or the companies which are the software underneath equities and fixed income and so on. All that software is largely open source, much more frictionless, and is now based on these programmable networks. And so for companies like ConsenSys, which are primarily software focused, this is a really compelling part of the story of how can we rewrite account opening and custody and portfolio management and trading and rebalancing and insurance, and how can we do it literally, at the speed of light rather than with a horse and buggy. And I think that's another framework, the asset class versus the kind of the machine that makes the asset class.
Maybe I can give some color on the learning curve. I mean, what's fascinating for me and for, I'm sure, everybody in the space is that everything's compressed, right? Things don't take 10 years. They take 2 months. And I can see the same with our clients. So I would be talking to a family officer or someone investing money, managing money. And maybe last summer we will be talking about building 2% allocation to Bitcoin, the narrative being digital gold, retention of value, inflation protection, and so on. And then 4 months later, we will be talking about building a position in Ether. It's like, okay, I want the rail on which all the apps run for DeFi. And now we will be talking about, hey, what does your research say about which interoperability coin is going to be, ahead of everything else? So the compression in time and the steep learning curve is not just with us, with the industry, it's also with the clients, which is fascinating.
So they're already looking for example, the picks and shovels of who's building those in this industry. That is interesting. Is there adoption of that software in the industry? Do your clients, ConsenSys, Lex, you can probably give us more color on that, but also on your side, from the investment side, are asset managers or prospective investors interested in investing in that space, that we will be in the theme of building, all this infrastructure for, the resilient capital markets that I mentioned earlier, that, have less counterparty risk, less settlement risk, it's more efficient, real time, nearly real time, and so on. Are you seeing that from your clients?
So we're seeing movement in both directions. It just so happens that the sort of crypto native side of the equation is faster paced and also more volatile, whereas the traditional incumbent part of the equation is incremental and linear in its forward momentum. ConsenSys earlier in the year received an investment from JP Morgan, and they're a client of ours in an enterprise Ethereum project across a number of others of that sort. And we are seeing private permissioned versions of Ethereum lead to new financial infrastructure run by bank consortia, supply chain, capital markets, and so on. We see the bank consortia building the financial applications and then using third-party services for the underlying blockchain infrastructure. And I think that's progressing at the pace of regulation, that's progressing at the pace of innovation budgets, and certainly within the context of managing a public company and lots of hedge fund shorts. The crypto native side, which is to say, there are many companies and funds and asset managers that are started with crypto custody as the first place where they go. Like they don't necessarily care about what's outside. They start with crypto custody and they start with crypto trading, right? And they have customers who are Bitcoin millionaires, and that's what they care about. And so for that group of people, they still are subject to regulation and have to be compliant and use tools like KYC and data analytics that in some cases we provide. But I'd say for them, it's this there's been an explosion, almost an acceleration from there is a token and a protocol. So to be aligned with Ethereum, you buy Ether. And it's gone from that to the proliferation of the protocols on top of Ethereum. So if you want to own the lending platform, you buy the Compound token or the Aave token. If you want the trading, you want to own the trading platform, you buy the Uniswap token. And this has happened over the last 6 months very quickly. And for many of the even crypto native funds, there is difficulty reaching all the way to DeFi. Especially if they do it on behalf of clients. And so there are now tools like Metamask Institutional that will connect a regulated entity with being able to kind of still trade these crypto native assets, but remain compliant. So we do see that for sure is happening.
So Metamask that crossed the 1 million users, monthly active users, right? I mean, and that's been solidified over the past 2 or 3 months, right? Is that also due to these integrations or not?
I have a guest.
That's okay. Stefan, what Lex mentioned about custody, are you seeing crypto native, or people that created their wealth in the crypto world as clients at the bank that come for the custody services and you may also cross-sell? And in general, are asset managers, are institutions like yours seeing the crypto natives as potential clients?
Yes, I mean, one of the reasons SEBA Bank is located in Zug, where there's an ecosystem of digital companies, is because a large part of our client base is crypto natives, right? And they're quite happy to have us there because a UBS is not going to bank with them, or any large bank is not going to bank them, which is quite bizarre, seeing that mostly the regulation is already in place. But having said that, crypto natives, crypto companies are part of our client base. And I think one of the fascinating aspects is you have individuals that have, that entered the market early and, held on to coins, Bitcoin, for example, and now they're, very wealthy. So you have this interesting situation where you have, billionaires that have a hard time finding a banking relationship, and they're completely regulated. It's all legal. So an interesting aspect here is you have very wealthy people. They're wealthy in tokens, in coins, but they're cash poor, if you will. So we have clients like that where they bring in their Bitcoin stack, for example, and then we'll make it work for them so they have cash to spend or to live on.
Very interesting.
Stefan, how important is diversification to these clients? I mean, they come out of crypto, right? And they are probably fine with taking gigantic swings on their net worth.
Yes and no. I mean, there's broadly two buckets here. There's the Bitcoin maximalist, for example, that he or she has a stack and he doesn't want to sell the stack, but at SEBA we help him or her to make money with the stack, loans or lending or option overlays, what have you. There's a number of ways to make those coins work for you. And then, there's also a part where people made a lot of money and they're actually looking to exit maybe a third. And this is where we, as a regulated bank, can offer managed mandates and say, okay, we'll take a third, we'll sell it in the market, and then we're actually, funnily enough, invested in traditional asset classes. So the client ends up, 2/3 crypto, 1/3 traditional asset class.
Very interesting. And does that also mean that some of the wealth that is leaving the crypto space is being diversified? Is it more public markets or private markets that are also maybe, crypto or blockchain infrastructure companies? Or does it really look more like a traditional portfolio where instead of 60% equities, you have 60% crypto?
No, as a general rule, we have a number of clients who do that. They want to take some profit off the table, if you will, monetize some of their holdings. But, they come in retaining their affinity for technology, for example. So even if you put together an equity portfolio for them, they want an equity portfolio that reflects cutting edge technology. So I think that's that's in their DNA. They were early in the space and they're interested in technology.
So full allocation to innovation, so to speak.
Yeah.
I'd be remiss not to kind of mention this. So yes, Metamask is the leading Ethereum wallet and's got about 1 million monthly average users, and so most of those are retail users. And there needs to be a bridge between the crypto institutions that are used to qualified custodian or relationship with an asset manager, and moving out of that world and into MetaMask and then into DeFi through the many various interfaces that are out there on Web3. And so that's definitely a build and a focus for MetaMask in the short term. But the thing I kind of wanted to add is there's a fun new asset class that's being added for crypto natives, which is the crypto art and non-fungible tokens. And so just if you were a family office and you were managing a 500 million portfolio, and maybe some percentage of that is going to be your gallery and your Picassos and your Brocks and the other assets you're getting out of Sotheby's, maybe whatever it is that you collect. In a very similar vein, digital entrepreneurs are holding digital art. And while the volumes in that are still below 100 million, we are seeing sales that are, anywhere between 100K to 3.5 million for individual digital artists. And this is pretty amazing in the sense that it finally it taps into that human desire for identity and for these visual goods and relating to them and status and all of these familiar things, but finally we're able to make them scarce. We're able to make these digital artifacts scarce and ownable. And so another thing that we're seeing more and more people do is store value, good or bad, we'll pin it to the other side, but store value in these non-fungible tokens, which are these visual artifacts.
Interesting. We've got one good question from the audience that I'd like to put out to all of you. And the question is, how do you explain the risk of investing in cryptocurrencies to your clients? And what is the investment horizon that you recommend to traditional investors? So who wants to take that one? Stefan?
Yeah.
Dominik?
Yeah, I can also take this, and happy for Stefan to add if I forget anything. We look at Bitcoin or digital assets as, and the question is directed at like traditional investors, to be just a part of a traditional portfolio. And like you mentioned before, maybe looking at a standard 60-40 portfolio of equity versus bonds, we see Bitcoin just or crypto just as a tiny portion of that portfolio, maybe adding, if you're really aggressive, adding 3 to 5% of that portfolio into digital assets. And when you do that, historically at least, Bitcoin has shown some interesting correlation statistics that helped the overall portfolio to be less volatile, depending on the time frame, of course, than a standard 60-40 portfolio. And so I think that's how we look at it, and that's how traditional investors should also tackle this. Do not go all in crypto. Always have the risks in mind. It's a volatile asset class, and be aware of that.
Maybe, yeah, absolutely. What we add to the discussion is really, you don't look at an asset class as a standalone investment. You wouldn't do that on the traditional side of the business. You always mix it so that it makes the combination makes sense, right? And at SEBA we have a large number of we have quite a few resources dedicated on research and asset management. So when we sit down with the family office, we say, well, where do you want to go in terms of how long are you investing for, and then what do you want the portfolio to do, right? And if you add a number of coins, let's say you add 5 to 8 coins, you're with an allocation of maybe 4 or 5%, that will practically double your Sharpe ratio. So the efficiency of your portfolio is going to double. That doesn't mean that the next day you're going to make money on it, but over an investment period of 5 years plus, it's actually going to benefit your portfolio.
Interesting. So the Sharpe ratio metric resonates with traditional asset managers, I guess, and also I assume that if you have the 5-8 currencies, cryptocurrencies that you mentioned, that you sort of smoothen out the drawdowns versus having one or two in the portfolio. Is that something that sells? And in terms of the risks, what are the risks that you warn your investors I guess was the question too, that are
Yeah.
different.
Right. The risks, we primarily talk to institutional investors. So they're used to balancing their portfolios and building their portfolios, right? You're investing in cutting edge technology, and you're investing in an asset class that's growing by leaps and bounds. So that has huge benefits, and it has some downsides. For example, enormous volatility, and holding the wrong coins, if you will, that can lose 90% overnight. So there's a lot of risks in there, and risks are mitigated in terms of selection. Go through, do your research, or have an asset manager or a bank like ourselves help you do the research. And risks are mitigated by sizing. So do the research and going small, 2, 3, 4, 5%. Don't going 30%.
And rebalancing at some
exactly
whatever it is, quarterly or whatever. As we approaching the end of our session, I wanted to go back to blockchain as an infrastructure and how it can change the business behind the scenes, because I really think that is very important. Even though we are early in that sort of evolution, but that is where the disruption, at least the way I feel it will come. What are you excited about? What are you seeing? What should asset and wealth managers care about? What can change their business? Because we've spoken quite a bit about investing and sort of taking advantage of the asset class. But I want to allocate a little bit of time on this. What is the next step? Lex, let me give you the stage, since ConsenSys is deep in this area.
Another dangerous question. So there is a really straightforward answer that I can give you, which is useful but not profound. So the useful answer is mutual fund administration is moving from spreadsheets to a single data source that's anchored to a blockchain, right? So that multiple participants in the value chain can share a data source. Supply chain financing, which is global, multi-jurisdictional, financial, legal, and complicated, similarly, when anchored to a blockchain infrastructure like in Covantis or Comgo, is able to just say, yeah, this is the legal document, not the fake one that you're giving me, which is a real problem. Like it's $100 billion problem that there's lots and lots of fraud in supply chains all over the world. And if you anchor the legal document to a source of truth, that's important and it matters. And you can go through multiple parts of the wealth management value chain and say, account opening, KYC and identity, all this stuff is it's strictly better if it's not done by people overnight in spreadsheets. Like the model of people uploading CSV files into a black hole and hoping something good comes out is atrocious and embarrassing. And this is where we are still today. And we say we can't do it because it's so expensive, right? So for sure that is happening. And there are multiple wealth managers and asset managers who are thinking about, how do I improve the efficiency of my infrastructure? Now that's really hard because you have to upgrade the whole industry at once, which is what the barrier is. So then that gets us to kind of the second order question, which is, are there places where kind of new markets are sprouting up and blockchain-based finance is being applied, because those markets are, either super illiquid or traditionally inaccessible and not fractional, and therefore, not part of a model portfolio pie chart. And so we can talk about commercial real estate and various.
You mentioned before too, right? or the passion.
Exactly. Art, fractionalizing art, and those narratives around creating, democratizing access for many mass affluent and high net worth individuals to really have the same allocation as an endowment. Does the demand exist for that or not? Hard to tell. But what we can say, and I think this third point is a little bit more profound, is that there is a wave of technology change that has been coming in and coming out as Bitcoin launched, and then we went with digital asset holdings and redoing a whole stock exchange and trying to do blockchain, not Bitcoin. And then initial token and initial coin offerings, and saying, actually, it's all the future of venture capital is to just, to be fully decentralized. And then the bust there, and in return, security token offerings, which never came in the volume that people expected. And then the rise of DeFi, which again says only in the wild west of innovation is the important stuff. And now what we see is kind of that coming back and saying, how can we use DeFi for regulated assets? So you'll see Aave and other protocols get licenses, money licenses, custody brokerage licenses, to put those very same traditional collateral assets and unlock, margin and loans and debit cards and services against your illiquid holdings. And so I think there's this ebb and flow, and we're getting closer and closer to that useful thing for wealth managers to actually say, yep, that's ready. It's cooked. I can do it now. And we're not quite there yet, but we're inching step by step. And I would just encourage folks to be really curious and spend the time to learn. Like, all you've got to do is learn, and the rest will come.
Yeah, and as Stefan said, the things happen so fast that it's challenging to keep up, but it's really worth it. It does pay off, return on investment, so to speak, of following the developments in the space and trying to understand what's going on. Lex, you gave us a brilliant overview, over the past 10 years, what's the swings that we have experienced, and the fact that VanEck, a traditional firm, has been in this space for, what is it, Dominik, 3 years?
Yeah, in at least from the crypto side, we've been looking at bringing a product to market since a bit longer than 3 years. That's right. But the business itself was founded in 1955. So we've a lot of history and insight. I quickly want to add to something that Lex said. What's interesting to those traditional players, what might come out of this innovation in the digital asset space, is this access to more uncorrelated return streams. We've seen this with Bitcoin, and I don't know, Stefan, maybe you can also add something to that. That clients are really looking for that, tokenization of equities or something. That return stream is already there, but when you really want to diversify your portfolio in a meaningful way, you need uncorrelated return streams. And I think unlocking that, whether that's DeFi or going deeper into tokens, I think that's a really valuable thing to have in the future.
Yeah, and I don't think it's going to take long, right? I think with the plumbing, Lex gave an overview of the rails and the plumbing that are in place now. And from an asset management perspective, I think what that means for the next 2 years is that now now I talk to clients about allocations on Bitcoin and how to mix baskets of coins into their 60-40 allocations. I think 2 years from now, I'll be talking about, mixing in tokenized intellectual property and art collections and things of that nature. And then we're really looking at, Bitcoin's just the entry door to this world. The rate we're going, I think 2 years, 3 years from now, we'll have entire portfolios with asset classes that are not available right now.
Hybrid assets that have tangible and intangible attributes to them, combinations that would be really exotic and non-economical to put together before. I mean, from my point of view, I always think of the endless structuring possibilities that this technology can offer us. And like in the traditional world, we used to, do structuring with mortgages and real estate and things like that, and cut and repackage cash flows in different ways. We can do anything and everything and have different combinations as long as it makes sense. On that note, I'd really like to thank you all. And I'm going to check once more if there's a last different question from the audience. And if not, we only have 4 minutes to end our session today. Is there anything that you'd like to share as a closing remark in terms of what's your sentiment for 2021? 2 words, if possible.
I'll have 3 words, right? It's happening.
It's happening. Okay. Qualifies 2.5 with the apostrophe. Okay.
Does that mean I only have 1 word now? Or?
No, you have 2. You have 3.
No, I think it's a good thing that has been mentioned before. I think continue learning. That the space is moving so fast, it's insane, but so many endless possibilities. So I think that's the mantra.
Keep up, to be kept up, as they say in yoga. Okay, Lex.
You can choose your perspective as a professional in financial services. It's entirely up to you to choose your identity and your perspective. You can choose to say, private banking is under assault by an army of decentralized hackers, and the Chinese fintech apps are destroying everything, and Google and Facebook are stealing my clients, and we're a melting ice cube, and it's horrible, and fees have fallen 30%, and my bonus will never be as good as 2006. That's a choice. Alternately, you can choose to say, it's never been more exciting to work in finance, where finally true technology innovation is coming, not just in the dressing up of the distribution footprint into mobile apps, but into what it means to make a financial product, how to distribute that globally to anyone, how to make it scarce, real, interesting, empowering, and you are so early in this that you have the chance to make it happen. And so, I just want to, for the folks who are in the camp, the number 1 camp of this fear, you can make the choice to be excited about the space, and it's very interesting and rewarding once you do.
The session will be recorded to replay. So what I promise to do is to take what Lex said and try and make it into 3 words. Okay? I'm taking on the challenge. Thank you so much.
Thanks for having us.